All right, all right, all right. What am I doing up there? Maybe I'll come down here. Maybe I'll go over here. Maybe I'll go up there. Maybe I'll go here. Maybe I'll go here. All right, guys, how's it going this morning, this afternoon? Very excited to come in here and do a little day trading. We are on our summer schedule, of course, as you guys know. This is my laboratory for my university students, and we're on summer break. So we just kind of doing our summer thing here. We're only meeting for day trading once a week. That's on Wednesday afternoons. We meet for our regular class in the mornings on Tuesdays and Thursdays. That's still our summer schedule. And this fall, we'll start back up and we'll go every single day, and we'll do a little bit more day trading as markets pick up a little bit in the fall time. July is actually a very good month, generally speaking. Trade miner. If we check in with trade miner, the seasonal nature of markets is, oh, look at the markets moving a little bit for us here. Maybe we could trade some. Look at how it's been pretty dead, just kind of sitting here going sideways. I've been watching it, wondering if we we're going to get to do anything. But July is usually a pretty good month. And so, you know how they say sell in May and go away. Well, when do you come back? July. All right. But we have to get past the 4th of July weekend. Yesterday was a pretty bad day. The market flushed really hard, but it just came right back again today. So we're back to kind of where we were yesterday on our overall longer term portfolios. And we review those on Tuesdays and Thursday mornings. For those of you who are not aware, you can come and join us. And we enjoy having as many people want to show up again, but just because it's a university lab doesn't mean that we can't have anybody from the world of YouTube come and join us. You certainly can. You're all welcome. All right. And what we focus on Tuesdays and Thursdays is the universal basic income. We've kind of been starting to focus a little bit more on that because that's where it seems that we've had a lot of success building ourselves a universal basic income portfolio. And then, of course, we like to do options. So we like to fund our universal basic income portfolio with our options trading. So we augment those two together, and it's a 1, 2, 3 knockout punch, because on Wednesdays we come and we do day trading and we augment our other portfolios with our day trading income. So we do a little bit of day trading, and then we do some options trading, and then we put that money into our universal basic income portfolio. And then that's how we derive our monthly income. All right, that's what I do. I'm not here to tell you what to do. I'm here to tell you what I do. All right. And so that's what I do. That's what I like to do. And I was talking to my buddy, Mark Peterson, and hopefully Mark's here in class right now. But I was talking to my buddy Mark, and he says, what are you gonna trade today in your power hour class? And I says, well, I thought I would just kind of do the most, the most aggressive markets, ones that move the most. I said, let's go look at the indexes. And so then we said, well, maybe we should do something else. Maybe we should go look and see what some of these other markets are doing. He mentioned that some of the other markets have taken off. So I thought it would be fun to also, this market's doing well right now, Mark. Look at it taking off. We got maybe an opportunity here in the NASDAQ. It was just dead here as we were sitting there watching it. Didn't do anything. So I was a little nervous about having any opportunity running the indexes in this class. So we thought, well, maybe we should go over and take a look at some of the more traditional commodities. And of course, the grains have closed, so we can't go look at those. We mentioned those, but let's come in and look and see if we can see what gold's doing. All right, so we'll check in with gold, and we're going to come in here. Let's come down here to a range bar 6 on gold. See if gold's moving. All right, gold hasn't closed yet, has it? Let's see. Nope, there it goes. All right. My uncle was talking to me about gold today. So gold's on the rise, and he was pretty excited about that. He wanted to put some money into gold. And so he's done that. And I told him to go spend his money. he's like, I said, how long are you going to live? And he says, well, I'll probably live another 5 years. I said, go spend your money. He's a curmudgeon. He's a wealthy man, and he just lives like a pauper. I'm like, go spend some money, have some fun. I don't have any need for it. I just like to hoard it. He just likes to hoard his gold. Look at this little ABC pattern in here. We got a beautiful little ABC pattern in here. This thing's come up from this low to this peak right here. Let's put it right on the number there, Land. Let's make sure we get the exact number down here. And right up to 130.9. Look at that. Just like a train on rails. Holy smokeroos. Look at that thing, baby boy. Are you going to get in right there? No, I can't get in up there. The probabilities are too low that we can pull something off at 130.9. Doesn't mean it can't go to 161, 200%. It certainly can. Just that right there is a little bit of a tough place to be jumping in on a short little day trade. We need a little pullback. We need some of these red bars. See, that's what we like. We like little red bars. We like to see the market run like this, run like this. And we get these little red pullbacks. Then when it starts to go again, that's where we like to get in and ride like Paul Revere to the next one up. All right. But now we need another one. We need another little pullback and another little rally like that. That's what we'll wait for. Now, of course, the more you get up here, the higher you get, the less likely it is that it's going to continue to rally. And it needs to digest some of this. So we get what we call the drive 1, and then this is moving into drive 2. We like to see it pull back and go into drive 3. We like to generally see 3 drive patterns, right? They get a little 3 drive pattern like that. And then when a market gets up to the top of that 3rd drive, we get a little ABC pattern back. And we generally can take our little Fibonacci ruler, throw that thing in there, and anticipate that once it gets up there to the top of that 3rd drive, it'll come back down somewhere around in here into the 1 standard deviation, which is down here between 38.2 and 61.8. That's generally what we like to see happen. Doesn't always happen, but it's something that we like to watch for, right? Something we can put money on if it'll do that. But right now, it's up here a little bit too high to be taking a long position. We could take a short position, but we're still bullish on this market. We don't want to take a short position because that would be the counter trend. And if that just repeats right there and we take a short position, the market wouldn't fall far enough to give us the opportunity to get in. Now, it doesn't mean it won't fall far enough up here. It could just turn right around and go tumbling down clear into here, and we could take a short position. But that's a bad bet because we like to see 3 drive patterns, right? And if that just gives us another little drive here, we anticipate that 3rd drive pattern. So this is getting a little high. Don't want to take a short position here because it might have another drive in it. So that's kind of where we sit right here on gold. We could kind of sit here and watch it for a minute if you wanted to. But while we're waiting for that one to do something, let's go look at crude oil. All right, how's crude oil? Crude. Let's go look at mini crude right there. Mini crude. Let's put on that Heikin-Ashi bar. And that's on a daily chart. We need to come down to something we can trade. Let's try range bar 6. Why don't you use range bar 6 in the NASDAQ, Lan? Because it moves a little bit too fast. Let's turn on our Heikin-Ashi bars. The cheat codes. I like those Heikin-Ashi cheat codes. Let's bring me down here. All right, we'll make the chart a little bit bigger. Oh, look what we're getting here. We're getting this nice little bump right here. See that right there? See how it's going to cross it? It looks like to me it wants to go one more time. I don't know. Is it going to do it? Nobody knows. That's why you put your orders in and you cut your losers short and let your winners run. If it doesn't go on one of those little signals, you just get right back out again. But right now, it looks like it wants to go. Let's give it just a second, see if it breaks those yellow dots. Those yellow dots right there are the average true range. And you got to, guys, I got mine set at a pretty aggressive state here. I just got that ATR period set to 1 and the stop factor set to 0.6. And if you guys are not familiar with the software I'm using, I will give you just a real quick little note here where you can go get the software I'm using.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so I'll show you all of my settings. And here's the settings I'm using for the ATR, average true range. And we can adjust that depending on what the market is. But that 6 right there looks pretty good. I think I'll stick with that for right now. And see, crude oil moves a little bit slow in here. We can look up here to see how slow it's moving. It's not closed, is it? What time does it close? Close is at 3 o'clock, so it's still working. We've still got 2 more hours before it closes. Moving pretty slow. Pretty slow there, Mark. That's what I was talking to Mark about. He says, why do you always trade the indexes? And I said, well, in Power Hour, they move. Gives us some financial entertainment. It's fun to trade some of these other markets, and they can be profitable, but they move so slow, it's not a lot of entertainment during Power Hour. We like some entertainment. We like some action. Let me show you what this would be. If we got in at this little arrow right here and just rode that up until it broke the yellow lights, which was right there, that was an $800 move. 69 ticks. That's pretty good money. $862. You can't complain about that in how much time? That started back at 9 o'clock this morning. until 12:30 today, 12:30. And then we had these little range bar 6. It's going really slow, Mark. So that was all day long. That was an all day long. $800 a day is not a bad move. So let's come in here and see what the key is. How much money would you have had to put in to make that $800? Well, it's a day margin, so you'd had to put $1,700. So you put in $1,700, and at the end of the day, if you'd have just rode that thing up on that yellow dot all the way, that'd have been $862 today. But right now, it's just kind of dilly-dallying around right there. We're not getting a whole lot of action. See, this moves pretty slow on crude oil. Let's go look at gold. That's why I kind of watch these other markets during the power hour, because we can get a little bit better. See, there's our little red bars. That's what we're waiting for. Oh, that might go green here. I don't want to see just one red bar. That's not good enough. What happens sometimes is you'll get a couple little red bars, and then you get a little green bar spike. And that's just to get everybody excited, and then everybody jumps in only to have it come back in, give us a couple more little red bars, and then it's the next little set of green bars that we like to go on. All right, so if it just gives us a little right in here, we needed a little bit more. I want a little bit more pullback. That's not good enough. So if it just goes red bar up here, then that's not good enough for me to get in. I want to see a little bit better pullback, and then back down in here. And that's okay to come down here with a couple little red bars, one green bar. Don't take that one. I mean, you can, just in case it does take off. Just don't get in heavy. And then if it comes down one more time, that's generally what we like to see. And then we'll go on that one. All right, that's kind of the pattern that I like. Just kind of a pattern, just kind of a recurring price pattern that seems to be pretty nice. This is pretty slow market, though. Let's go look and see if there's something else in the list that looks fun to go look at. We got in the indexes. We'll skip those for right now. Soybean, those are the grains. Let's go look at the 10-year. Is that thing open right now? What's the hours on the 10-year? Let's see. Let's open that up. Go to the key. Let's go into the range bar 6. What are we getting on the 10-year? Why that's loading. Let's go look at the key. Closes at 3 o'clock, so we're good. We still got 2 hours on it. That's Mountain Standard Time. That's my time. Day margin on that, we'd have to have $1,200 to put on one contract. So there we go. Let's turn on the Heikin-Ashis. Now that's a range bar chart, so that's a range bar 6. Oh, look at this. So again, key, day margin, $1,292. If you're going to hold it overnight, then you got to have a little bit more than that. You're going to have to go into initial margin, which is $2,585. But just to trade it during the day, $1,292 is all you need to have. All right. That's why you can open up an account with like $5,000 and come and trade over here. There are no pattern day trading rules in the futures market. Futures market, of course, trading out of the exchanges out of Chicago, not New York. Different rules, different companies, different organizations. They have different rules. There's no pattern day trading rules in Chicago. So all you need is just a special piece of software. And of course, like I mentioned.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures.
Okay, so that's all you need. You just need the futures version of the software, and then it'll connect to Chicago. Can't use the stocks version because that connects to New York. But New York has pattern day trading rules. You have to have a $30,000 account to trade, day trade on it. All right, or they shut your account down for 90 days, put you in the penalty box. They don't do that out in Chicago. We don't do that in Chicago. We don't penalize you for trading. That's kind of silly. Oh, we're a trading organization and we penalize you for trading? No, we don't do that in Chicago. All right, so no pattern day trading rules. Open your account up with $5,000 and trade to your heart's content. Now, you can't trade individual stocks. You can't go trade Amazon and Microsoft, but there's a lot of fun things you can trade in here. You can trade the indexes, right? We got crude oil and gold and silver. And it doesn't take a lot of money because they're margined accounts, right? So they're leveraged accounts. Of course, anytime you can make a lot of money with a small amount of money, you can also lose a lot of money with a small amount of money. You got to remember that. So cut your losers short and let your winners run. If you get a little signal and you want to take it, get in. But if it doesn't go immediately in your favor, that's the key to trading. A lot of people don't understand that. That's the key to day trading. All right. When you get a signal and you decide you're going to get in, the market has to decisively and immediately go in your favor. If it doesn't, just get right back out with a tiny little loss. And then if you have 2 or 3 of those tiny little losses in a row, no big deal. When you catch one and it goes in your favor and you can ride that baby, right? Cut your losers short. let your winners run. Your winners will outpace and pay for your losers, and away you go. But if you let those losers run and then you cut it after a long time, you may have a big old loser. Ooh, that's pain, right? That's where the pain comes in day trading. You let those winners, you let those losers run. Don't let your losers run. Let your winners run. Cut your losers short as fast as you can. And usually one price bar. That's it. I only let it go if it higher highs and higher lows. Remember, the name of the definition of an uptrend is higher highs and higher lows. Definition of a downtrend, lower highs and lower lows. As long as it's making higher highs and higher lows, stay in that baby. Okay. But if you get in, and if you immediately get in and it stops making higher highs or higher lows is what we go off of, right, when we first get in, because that's where we put our trailing stop. If it doesn't make higher lows immediately once you get in, just get out. Just get out. It's not worth it. There's lots of trading opportunities. You don't need to make every single trade work. If you decide to get in the market and it doesn't immediately start making higher lows, just get out. Get out. That's what I've learned. All right, Mark, we're not having a whole lot of fun here on some of these other markets. They're moving really slow, really slow. So let's come in and let's go into the NASDAQ and see what we're doing here. Now, this is the NASDAQ. This is a range bar 18. You notice on the 10-year T-note, I was looking at range bar 6. Crude oil, we're looking at range bar 6. Up here on gold, we're looking at range bar 6. And they're really moving slow on range bar 6. But range bar 6 is good. For those of you who have seen my course, it's called the Heisenberg course. I don't know if you guys have seen it. Some of you are probably subscribers to that, the Heisenberg strategy. That goes off the range bar 6. And we look for a lot of these recurring price patterns on the range bar 6. That's what really the Heisenberg strategy is. It just means that we look for past performance to predict the future results. And we look for these different recurring price patterns. And, that's what we're looking for, these little A, B, C, Ds, the 3 drive patterns, that kind of stuff. But, I like to use the Heikin-Ashi bars. If we turn those on, these are range bar Heikin-Ashi bars. Those are quite a unique bar. You don't see those a lot. Not a lot of people trade with them. I do because I like them. But you have to have the ability, you have to have a trading platform that'll give you range bars, and then you have to have a trading platform that'll give you Heikin-Ashi bars over the top of the range bars. Then you have to have a platform that'll give you this ATR over the top of the range bar Heikin-Ashi bars. If you don't have that, you can't trade like this. It's kind of cheat codes, right? It's kind of like cheating. Look how nice and smooth and clean the bars are when you trade like this. It's definitely a cheat codes. All right. So we just need to, whatever you can do, cheat as best you can. Don't do anything illegal, but this almost feels illegal the way these bars turn out. All right, because you have the Heikin-Ashi bars. I'll turn those off just so you can see. That's a normal range bar chart. And a normal range bar chart is range bar 6, meaning that it's a market has minimum moves. The smallest increment that a market can move each time. If you come over here to the key, it'll tell you. Right here, the smallest increment, 1 full point movement is $1 in the gold in this particular gold account. So the minimum move is $1. So every time it clicks, that's the smallest move it can do is $1. So that means a range bar 6 is $6. So the market has to move at least $6 before it will give you a new bar. All right, so that's what a range bar 6 is on this particular chart. If you go to a different chart, we can go over, for example, let's come over here to crude oil. Let's go to the key, and you can see it. Well, it's a full move is $1 as well. So let's go to another one. Let's go over to NASDAQ. Let's go to the NASDAQ, and we'll go in here, and you can see that it's 25 cents. So for every time it clicks, click, 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 right? The smallest increment it can go is 25 cents. And this is on the mini. So if we have a range bar, well, this is a 1-minute chart. If we come over here to a range bar 18, that means it has to go 18 minimum moves or 18 50 cents. Or did we say 50 cents or 25 cents? What did I say? Oh, 25 cents. 18 25 cents, right? Because 25 cents is the minimum move. So 18 times 25, that would be the price of one price bar on the NASDAQ. That's the NASDAQ mini. All right. So that's your minimum move. And so that's how you count. That's how you know that when you do a range bar 18, it's going to go 18 minimum moves. And you can see how big a minimum move is in your key. So 18 minimum moves, and then it'll give you a new price bar. Now, if you turn off the Heikin-Ashi, again, that's how you're going to get the exact same size for every bar, 18 minimum moves. Now, I turn on Heikin-Ashi, and Heikin-Ashi kind of messes with it a little bit. It comes in there and it smooths it out. It puts a little mathematical model over the top of it. And you'll see that the bars are not exactly 18 ticks like they are when you take that off. That's what it's doing. It's just kind of like a moving average that's added to the bars themselves. And not rather than laying the moving average over the top of the bars, it actually takes that moving average mathematical formula and sticks it into the bars themselves and kind of makes the bars themselves almost like an indicator. And I call it the cheat codes. It looks like to me it's cheating. I mean, look how nice and beautiful and smooth those bars are. And we can really kind of see when it's starting to trend. Now, look at that. It just kind of went straight up. We thought we were going to get an up, and then it just turned around, came right straight back down. That's called swing trading. All right, swing trading. If you come in here and you buy every time you get a buy signal and sell every time you get a sell signal, that's called swing trading. So you can see, you can set up your indicators to do that. You got this indicator comes in, you get one buy for every sell. Swing trade. Buy, sell, buy, sell, buy, sell, buy, sell. It doesn't matter the time frame. You can swing trade on an 18-minute chart. You can swing trade on a 1-minute chart. You can swing trade on a daily chart. Now, you get out on the internet and you see all these guys out here on YouTubes, and they've got their minds screwed up. They don't understand that swing trade, to them, they think swing trading means that you go out and you trade on a daily chart for a long time. That's not swing trading. Swing trading is buying and selling every time you get a buy-sell signal, and you can swing trade on any time frame. Buy, sell, buy, sell, buy, sell. You ever swung? You ever gone to the park and got on a swing? And they got, chains and a little seat. You sit on it. What do? They swing, right? Back and forth, back and forth, back and forth. I don't know how that got confused. Some guys got confused out there and said swing trading is only on daily charts and it only means that you go and hold for a long period. No, that's called investing. Swing trading is what you do when you trade. You can swing trade on any time frame. It doesn't matter. You just buy, sell, buy, sell, buy, sell. And not all indicators will do that. Some indicators don't give you one buy for every sell, so you don't use those indicators for swing trading. You have swing trading indicators, right? One that gives you one buy for every sell. One of my favorite indicators is the bulls and bears. You come in here, you go to the bulls and bears, and I'm going to turn off the ATR for a second and show you the bulls and bears. Now, notice that the bulls and bears doesn't give you one buy for every sell. Buy, sell, buy, 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 sell, sell, buy, sell. See that? Not one buy for every sell. Now you can come into the bulls and bears and you can set it. See this right here? It says arrows on all color chains. If I turn that off, boom, now I have one buy for every sell. Buy, sell, buy, sell, buy, sell. It's a very powerful tool, but it's based on Fibonacci. So you'll say, well, it didn't give me my arrow until halfway down the trend. Well, that's by design. That's because that comes in. If you put your Fibonacci ruler in here, it's telling you when it's leaving the Fibonacci sweet spot, which is the one standard deviation right there. See that? That's your one standard deviation. And the bulls and bears tells you when the market's in the neutral zone or the Fibonacci sweet spot, one standard deviation. And then that arrow tells you when it's leaving the one standard deviation to the downside or leaving the one standard deviation to the upside. See that? That's what bulls and bears is all about. It's all about Fibonacci Elliott wave. It's a very cool tool. Oh, it's wonderful. But when you're doing a little bit of scalping, you don't want to know that number right there as importantly as you want to know this number right here. So we turn off the bulls and bears, and we can see just when we're going to do some scalping and some swing trading. All right, we turn on the swing trading tool, ATR. We're going to come in here, and that's a little bit more of a swing trading tool. All right, one buy for every sell. And there's no thing in here that says multiple buys, multiple sells. It's not a thing, right? It's a swing trading tool. All right, get your knowledge set up properly. Don't go listen to these guys out on YouTube. Don't know what the hell they're talking about. Can't trust them guys. Don't know what they're doing. You got to come here where we got a little bit of extra knowledge to share with you. All right, how things are done properly. Look at this thing. We got a little bit of an up down here. So always remember when you're swing trading, you got one up for every down. Up, down, up. The only thing we don't know is we don't know how long the ups and downs are going to go. So we got between this up, this arrow, and a down. So that's your up and down. Problem is we got lots of chop in there. So when it's choppy like that between your ups and downs, don't trade. That's the hardest part of trading. All right. Trading is easy if a market's doing this kind of thing. You just get into that and ride like Paul Revere. No problems, no problems. Where you get burned is when it starts doing this kind of thing and you don't realize it, you don't recognize it, and you don't stop trading. That's where you get killed. That's where you lose all your money. All right. So you have to wait for a market to start to move and trend and have some action. And I generally like to check this out at the top of the hour. You'll notice if you come over to the top of the hour. Now, it's oftentimes we'll start a little bit before, a little bit after, but around the top of the hour. See that? There's your 12 o'clock top of the hour. If we go back, you get a little action around the top of the hours. So let's come back. Here's another top of the hour. Not some good, you know, I wouldn't say, but it kind of took off right there on the top of the hour after the top of the hour. So the bottom of the hour over here, I don't trade so much. I like to trade the top of the hour. So once we get to the top of the hour, see that? There's the top of the hour. So then the market generally starts to move a little bit. See that? There's some nice moves in there at the top of the hour. Now, remember, and then of course back here, this is the bottom of the hour prior, right? Lousy. Top of the hour, good. All right, see that? That's kind of what you're looking for. You want to have markets that are swing trading, all right? Swing trading. Now remember, when you're swing trading, there's one up for every down, and you got to have those markets go up and down far enough that the market has a chance to give you some money before it turns around and goes the other way. But there's always one up for every down whenever you're swing trading. And again, it doesn't matter what time frame. We just happen to be on a range bar 18. All right, so we're range bar 18, one up for every down. And let's look and see how much money, again, go to the key. How much money would you have to trade to swing trade this? We'd have to have $2,000. So if you have a $5,000 account, you could swing trade this with $2,000 in and out. And how much would you make each time? Well, if you'd have got in on that little arrow right there and wrote it to this little arrow right there, that's $250. If you take in the short position, if you got on this arrow and down, got out on that arrow, that's $170. How about the other direction? From here to here, that was $255. If you go from here to here, well, that might have been maybe $100. This one here would have been a loser. This one from here to here probably made $50. This one here from here to here, that's about $250. This one here, maybe $50. Maybe, you know, scratch trade if you're maybe $50 on that one. This one would have been a loser. This one would have been a loser. This one would have made a little bit of money. All right. So that's how you trade. But what you got to do as a trader, the biggest, hardest part you got to do is recognize when it's the best time to trade. I like to start at the top of the hour and see if the first half of the hour isn't a good part of the time. And then it kind of dies out at the bottom of the hour. And then we go into the top of the hour again, and we can generally pick up a little bit of a couple of good trades in the top of the hour. But again, remember, the key is wait for the market to do these nice things, and then if it starts doing that, stop trading. Stop trading. Don't force it. All right. Now, the thing is, we don't know how long these are going to be. We know that we're swing trading, one up for every down. We just don't know how long those are going to be. Now, sometimes we like to see continuations. Like right here, I wanted to see this market go up, a little tiny pullback and another up, little tiny pullback, another up. It just didn't happen. It rallied up and then it flushed right back down. Then it's rallied up and now it's flushing right back down. Maybe we'll get 2 drives down like this, all right? So that's that little extra drive there. You're like, well, Lan, why aren't you taking it? Why aren't you in that arrow? Well, we're a little bit, I'm pontificating a little bit too much. Now, if we come down here, we got this little flat bottom in here. I don't know. I'll show you. What we can do is we'll just come in here. And not very easy to trade. We just hit sell right here. Okay, let's try it. We'll hit sell. And then we're going to put our stop right there on the yellow dot. Now in track and trade, it's really easy because you just come in here, you drop your order on the screen, you hit edit, and you come in here and you say we're gonna actually buy one, and we're gonna trail on the ATR just like that. And it's gonna trail, and then that's where it's gonna get you right back out if you're wrong. See, if we go, the market turns, if it goes back up and hits our little yellow dot, well, we get right back out. It's not making lower highs in this case. Remember, we said higher lows all the way up. Well, it's the same for the on the way down. If it doesn't continue to make lower highs, then you don't want to be in this market. And that right there just did not make a lower high. Now, it didn't hit our yellow dot, so we're still in, but we're going to see. That's not a good sign. You don't like to see that pop up there. You like to see lower highs all the way down and higher lows all the way up. All right, like this, big, beautiful, higher lows all the way up, lower highs all the way down. Now, sometimes it gives you these stupid little spiky dikey doos right there. See how those little spiky dikey doos? That's why we use the yellow dots to trail on rather than just on the price bars themselves. Because if we trail on the price bars themselves, we're not giving ourselves a big enough buffer between where those little spiky dikey doos come in there and spike us out and stop us out. So that's why we like the little yellow dots. But the yellow dot does hold your order back just a little bit farther. To avoid those spiky dikey doos, but in holding it back a little bit farther, you're taking a little bit bigger risk, right? All right, it's moving in our favor. There we go. We're up $85, $95. We're just kind of let it run. There we go. See how it moves all by itself? It follows those yellow dots. We just need to have that make a nice, big, and long enough move. Now, if you're happy with $80, you could just take it off right now. It's starting to come back against us. Oh, that's not good. Oh, it stopped us out with a $15 loss. We were up $70, and then it spiky dikey dooed us out. right there. See that? It hit our little yellow dot with a little spiky dikey do. That means it might turn around and go back up. Good thing we got out. Or it could have kept going down. Now turn and go back down. That's a little frustrating when it does that. So if that's the case, we think it's going to go back down and just spiky dikey do us out. Sometimes we just get right back in and say, I'm going to try it again for the short side. And we'll put our stop back on that yellow dot once again. Edit, tell it to trail on the ATR. And hit OK and see if it's going to go down again. If it goes up and hits our, spiked us out one more time. That was a bad decision. All right, well, that means it might be going up. Let's wait and see if we don't get a little reversal here, but the market's starting to die again. It's not moving in a nice trend. It's giving us lots of hairy tops and hairy bottoms. We don't like hairy tops and hairy bottoms, especially we don't like hairy bottoms. Hairy bottoms are the worst, man. When you get lots of those little hairy things on here, you get hairy bottoms. No hairy bottoms. All right. Of course, on the way down, we don't like hairy tops either. See, we're getting a lot of hair on the top up here. This is called hair of the dog, man. Hair of the dog. Wasn't there a hair of the dog? I know what it means in alcohol. Is when you get up in the next morning, if you're drunk from drinking too much, you drink in the morning, right? It's called hair of the dog. You drink some more, it makes you feel better. Just get drunk again. Let's try it. Let's go ahead and pop a little one in here. Let's take a little hair of the dog right here. And we're going to go ahead and edit. We're going to trail on the ATR. The ATR hasn't even shown up yet. So it'll wait for the yellow dot to show up and then it'll start trailing up on it for right now. We got one position in there. If it'll give us a little action and says, hey, we're going to really rally right now. I'm going to go up. Then we can add a second one if we think, I think it might go on two. But right now, we'll just start with one. We don't want to be too aggressive. I mean, we're beginners, right? This is a beginner class. We don't want to go in there with 14 contracts right out of the gate. Let's start off with one. And if it looks like it's going to go, right now it's hesitating. It doesn't look like it wants to go. It's kind of petering out on us. If it'll go with one, if it'll start to go and hey, it's really going, we'll click in another one. We'll go two, and then we can click in a third one. And if it really feels like it wants to take off, we'll click in a fourth one, fifth one. That's how it goes. Yeah, it in, but right now it's just in with the one. It's just sitting there dilly-dallying around. It doesn't feel like it wants to go anywhere. Let's make it a little bigger so you guys can see a little better. How's that? Whoop, there we go. Let's see if it wants to go. We can add another one. Let's pop another one in there. It feels like it might want to go. It means we have to put another stop in here. Be a little bit more aggressive with this stop. We'll put it one bar back. If it breaks the action bar, we'll just get out. So we come in here, and I'm going to trail that one on the ATR as well. Actually, we could be a little more aggressive. We could trail this one price bars back, and I just say one price bar back. And I like to do 1.1 because that gives us enough room to accommodate the spread. So now we got one price bar back. We've also got one on the yellow dot. We got our trailing stop in there. We're up $2. Now we got our money back. If we wanted to, we can come in here with the limit order, right? We come in here, and that tells you right there how much money. Well, it's not because it's not hooked up. But we could come in there and take that off with the limit order and just take our profits off. We'd be back, have our loss of $70. But then we also give up the opportunity for that thing to keep going. So we need to let it go, see if it wants to go. If it doesn't go, we just get right back out and wait again. Come on, baby. Rock and roll. Let's go. Let's go. I want to see it come up here and break this high. Let's see if it'll break this high right up in here. And then the next high is up there. See if we can go up there and going into it's the bottom of the hour, so we have to take that into consideration. But it is 30 minutes before the market closes. We'll see if some guys want to get in and trade to the long side here in the last 30 minutes of the power hour. Now, our goal is to make $500. All right. We got 2 contracts long here on the mini. Now we can come in here and watch. I'll show you a cool little trick. I can come in here. Now I like to have my stops broke apart, but we can come in here. Oh, come on. Don't do this to me. Don't peter out on me again. You wimpy market. Look at that. This is making me sad. If it comes back and stops me out, I'm going to be really angry. You rotten little pig. Go. We got something that can make this thing go. Watch this. This is my voodoo doll. If I stab him, if I threaten to stab him, the market will go. If it goes back and stops us out, that's when he gets a pin in the neck. All right, so we got our little voodoo doll here, and this is the power we've got to move the markets. That's it. Once you get in, the only thing you can do is cheer. Yay, yay, yay. Or you can go, market, go. Make us money. Go in our favor. I don't know. Doesn't have any power. Come on, little guy. Come on. Come on. I got two of them. Got another one. This is red, though. This is to make a down market. This is to make an up market. So we got to stab this guy. Come on. Up, 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 up. This market's dead today, isn't it? It's really going slow. It's the week before the 4th of July. You know, it's to be expected. But we've got a little bit of movement in here. The market's really slow. Look at the volume on this thing. It's almost dead. This market is completely dead right now. You think we can get our money back? I'm going to show you a cool little trick. I'm going to come in here and go add OCO, and I got the little things that are hooked, and I can come in here and see how it tells you right over there how much money you're going to 675. We just need to get $70 back out of this market. You can come down and put that $70 in there, and then we can just go. Oh, I'm a little bit late to the party. We could have got our money back. Exit chart. Now we're down $190. This market's dead. Dead, Mark. NASDAQ. Oh, that's the micro. Let's go back and look at crude oil. Yeah, see, it's so slow. So slow. It's not doing anything for us. Let's go look at the 10-year. Slow. Look at it get spiky do. Look how many times it hit the yellow bars. Let's go back up to gold. Gold. Come on, turn on your Heikenhashi cheat codes. It's trying to fall, isn't it? Trying to give us this little pattern up here, little 1, 2, 3 top formation. We can try it. Let's come in here with should we start with 1? Yeah, we'll start with 2. Let's go ahead and sell 2. And we'll go like this, and then we're going to put 1. We'll put a stop. Let's just put 1 stop right here behind the action bar. We'll put another stop up here behind the first bar back. How's that? Let's just see if gold won't fall for us. Come on, gold. If it goes down, we'll make money. That's what this is. It's called a short position. And you can make money when the mark goes down just as easily as you can when the mark goes up. All you have to do is just pick the right direction. If you think it's going to go down, say you're going to sell. The only way you make money is to buy low and sell high, but you can sell high first in the futures market and buy back low later. They let you do it. How can I sell something I don't own? Don't worry about it. They let you do it. Sell it first, then buy it back low later. The only way you make money is to buy low, sell high, but you can sell first, sell high, buy back low later. If you sell first and it goes up, well, you lose money. Just like if you buy low and it goes down, you lose money. It's just the reverse. All right, you can do it. Just don't worry about it. You can do it. I can't understand that, Len. How can I sell first? You just can. All right, this is what we call a 1, 2, 3 top formation. All right, so we got 1, 2, 3. We're trying to see if it doesn't just immediately move in our favor. If it doesn't, just get out. Just get out. Don't take a big loss. All right, we're just trying to see if this market won't flush and fall. See how the C is lower than the A? It went up and tried to break the CA and it couldn't do it. All right, so that's called a failure on the second drive up. All right, I mean, you could really come down here and say, well, I'm smart. That's drive 1, drive 2, drive 3. I don't really want to do that. I want to call this drive 1, drive 2, and a 1, 2, 3 top formation, and it should flush. Come on, baby. Rock and roll. We're going to come down here off the very low to the very top. We should see this thing come back down into the 1 standard deviation or the Fibonacci sweet spot, which is right here. Didn't do it. Now it's going back up and it's spiky dikey doing us out. So now we're down $340. $340 isn't really all that much. Our goal is $500 a day. We're allowed to lose 2 days worth of value, which is $1,000. We're only down $340. We can pick up $340 pretty quick if we could just get into a market that would move in our favor. See, $340 in this market, well, in this market, it's that far. It'd have to move that far with a single contract. If we had 2 contracts, it would be about half that. I only have to move down and test this. We're starting to get a little underwater here. We haven't been able to catch a move. There's trying again. Look, it's trying to go grid again. It's a very small risk to put it in there right now and have your stop on that little yellow dot. But it's a little bit too close right now. We need to let it go a little bit far away so it doesn't just kind of pop up there and spike us out. Let's see if it's going to go one more time. This is real common for the market to start to go, come back and spike everybody out who got in, hit their stops, and then turn around and flush again. That's real common. See, that's what happened here. Everybody got in, came down, came back, stopped them all out, and then flushed. And that's what we're looking for here. Maybe we can get a couple of these. We're doing 2. Come on. Come on, gold. All right, we're going to, ooh, that was a bad fill. All right, we're going to do this. Watch, I'm going to do it like this. We're going to right click on the order, come in here, add OCO, and we need to make $340. So we're going to put this in at 340, which is right there, 360. And then our stop, we're just going to bring it down here, and we're going to put it just right, just above, just right in here. Now we need that market to fall. Just to get our money back, we need it to come down here. And we got to get back-itis, all right? So we put a limit order to take some profits there. If it'll drop, come on, baby, drop for us. We got 15 minutes till the market closes. Now this is gold, so the market doesn't close here till 3 o'clock. But you'll notice that even in the like markets like gold, even though the stock market closes and this one doesn't, the volume will dry up at the same time here. Oh, look, it's trying to go up again. It's going to stop us out again, and we're going to be down even more. All right. Now you're going to look at it and you're going to say, but land, now it looks like it wants to go up. There's a little ABC pattern to the upside. It's green bars. It's breaking. It's going to do the little flippy dippy do and going to go up again right here. So now that's a buy signal. I know it is. You're preempting the buy, so it hasn't flipped yet, but you can do it. You can do it. You can do it. This is called, we just keep incrementing one more each time we flip. It's a dangerous strategy, but you can do it. It's called the flippy dippy do. You wait for a trend to occur. So what you do, you start with 1. If you get stopped out, the next one is 2. And if you get stopped out, the next one is 3. If you get stopped out, the next one is 4. If you get stopped out, the next one is 5. And so you keep increasing 1 as it goes. Eventually, the market should run, right? Take off and go, and you'll just keep incrementing, and maybe you'll get your money back a lot faster. But doesn't always happen, right? Sometimes you don't catch the trend, and you get your hiney handed to you. Remember, $2,000 is our max that we can lose. Once we lose $2,000, we got to go away because we only make $500 a day. Or no, if our goal is $500 a day, we can only lose 1,000. We're already at 1 day, 550. So we're playing the flippy dippy do. Got to have a breakout and have the market go. Didn't go down. Now it's trying to go back up again. It'll get a little arrow here as soon as that bar closes because it broke the yellow dots again to the upside. Come on. We can stab him in the neck again. Come on. That's all we can do. Now you can reverse this. I'll show you a little trick what we can do because I've just been incrementing it as we go, but you can have it reverse increment. So watch this. We'll bring this down here. This is our trailing stop. And we're long 4, and we only got this set to 4. But we can come in here and we can go edit. We can change that to 5. So we can have increment to the downside. Now we can come down here and we can go edit order, and we can trail that. Price bars back 1.1. Now it'll automatically flip for us to the other side and go down. And you can just sit there and go, oh, it didn't flip. Look, it didn't give me the 4. I wonder how come. Let's go in here. We'll go with 5, 3, 4, 5. And then we'll come in, we'll go like this, trail, price bars back. But the market's just dead. It's dead. We probably shouldn't be trading at this point. We should probably go find something else. This market's dead. 15 minutes before the stock market closing bell, this market doesn't want to do anything. Doesn't want to trend for us. Well, this is boring. Let's come in here. We got to have some excitement. Let's come in here. There's our 15-minute bell. Can you hear it ringing? There you go. All right, we're going to come down here, see if that'll let me decrease that ticket right there like that. Did it? Nope, I didn't. All right, let's come in here, and we're going to go 3, making me replace it 4. I'm going to go back to 4. And I'm just going to put my stop in here, and I'm going to say, look, if it's not going to trail for me, if it's not going to go trail, we'll just do price bars back, and we'll just, how about we just trail? Oh, it's not going to let me do it that way. Okay, okay. That's okay. We'll just hold it right there. Trail, price bars back, one price bar back. While that does its thing, we don't have to sit here on it all the time. We can leave and go somewhere else. Let's go look at the micro, or let's go look at the NASDAQ and see if we can't make some money on NASDAQ. It's trying to go long. It's trying to go up right here. Let's go. It's in a downtrend. Lower highs and lower lows. That's not a good uptrend. That's a downtrend. So let's go like this. Let's come in here. Let's put in 5 contracts on a stop. And we're going to go edit. We're going to trail. Oh, am I going to be too slow? ATR, did we already miss it? We did. Damn it, damn it, damn it. Let's try it. Let's try and take it. There's just 2 contracts. If it'll break and go again, we'll put on a 3rd one. Come on, baby. We're not getting anywhere, though. We're not having any fun here. We're not making any money today. Can't get this market to move. Look, we had one little thing here, Mark. One little move in there, and then that was it. Then the thing died on us. One little move. Okay. It's trying. It's trying to go. It's trying to drop. Okay, we'll put a 3rd one on there. All right, so we got 3, 4. Let's stop us out, right? If it just goes up and breaks, we need it to continue to make lower highs. If it doesn't, we just get out again. I'm not going to sit here and let it take money away from me. Lower highs, lower highs. Come on, buddy. Drop, drop, drop. Now, what do we need? We need $550 to break even. We could put that in there. We could come in here. Let's delete that stop. Come in here, add the OCO like this. Gonna cut and put this in here. And then we got, let's see, that got the number right here, 2100. We don't need to go that far. Oh, look, it's going back up. You piece of shit. What a rotten market. Come on. We need 550. So let's put this at 550. 560. If it'll just go down there, we'll get all of our money back. All right. Oh, we get, let's trail this. Edit, let's trail it. Trail. Price bars back. Let's just do 1.1 again. All right. So as long as it's making lower highs, we'll be okay. Just don't give us a spiky dikey do. No spiky dikey doos. There's right on the little yellow dot. 1 price bar back. Come on. Oh, we got this little guy now. Okay, we got the red one. So this is the red guy. Come on. Short position. Go down, market. Go down. Go down. Stab him good. In the neck. Right in the neck. Yeah. It's got to be painful. Stab him in the neck. I can stab him in the heart. You think YouTube's going to ban my video because I'm stabbing my voodoo doll in the neck? Come on. All right. That's all we can do is sit and wait. Take it, Lan. It's $120. It's better than nothing. The market's not moving far enough to make any money. Just take the 20. Take the 100. Take the win, Lan. Take the win. You're probably right. Got stopped out. Now we're down 650. This market ain't moving anywhere. It ain't going anywhere. We're not at the, we've missed our top of the hour. Look how dead it is. What do you want to do now, Lan? Well, walk away is what I want to do, but we can't do that because we're in class. We got to keep trading. Got to keep trading. Are you going to go long here? Oh my hell, that's the 10-minute bell. That's what happens on the 10-minute bell. Be mindful of that. 10-minute bell. Now what's it going to do? That was all the computerized systems, the quant systems shutting down, closing out all the other positions for the day. They always do that right at the 10-minute bell. Well, what happens after the 10-minute bell, Lan? Nobody knows. Take your signals. Watch the market flush all the way down here. Watch it go, whoom, and we'd have got all our money back. And we didn't get in. Why aren't you in? Well, let's see if it'll pull back just a little bit for us. Just a late entry. There we go. Pull back. There we go. There we go. There we go. Okay, we'll try it there. I'm going to just put it right on the little yellow dot. Edit, trail, little yellow dot. Okay. All right, let's see if it'll go again. If it won't, we get stopped out with another big loss. Oh, man, you just hit $1,000 loss. What a shitty market. What a shitty market. That's it. We can't trade anymore. You hit our goal is $500 a day and we're down 1,000. We can't trade anymore. All right. That's it. What a dead market. It just died on us, completely died. We thought we were going to get something good here because of this, and then it just died. There's nothing in there. There's no money in that thing. You could scalp a couple of ticks. You could have done the J Golden and just done the 5s. Take 5 ticks every time it give you 5 ticks. Would have probably been okay if we'd have done that, but we're looking for a little bit longer trend. I thought we could get something out of it today. But maybe considering that it's just the weekend of the 4th of July, we should have known that there wouldn't be anybody here trading. You can't get big trends if you don't got nobody trading, and there ain't nobody here because everybody's off shooting off fireworks with their families. Are you guys going to go shoot fireworks off with your family? What happened to our other trade over here? Is it still going? Oh, well, it's still going a little bit over here. Look, we got a little bit going on gold. A little bit going on gold. We're up $80, $200. How much do we need? Oh, $1,000. So, well, we got 5 more minutes. Let's see if we can't get something out of it. There's 240. Come on, little gold. Let's go. Let's go. Everybody wants gold for the weekend. Let's trying to break above that previous high. If it can break that previous high, maybe we'll get some buyers right there. Of course, you also get some sellers right there too. They've all got their limit orders to sell when it hits that, and then that flushes. Now we're back down to $40. Come on, market. We couldn't catch a single trend today. Them's the breaks. That's what happens some days. I got a Sunday school lesson for you, so don't run off. We'll give you a Sunday school lesson before we go. And maybe it's an apropos Sunday school lesson for today, because we were trying to get a longer position. We're trying to make more money than what the market wanted to give us. We should have trade shorter positions. Maybe just try to scalp out $100 a piece instead of the trail. We weren't doing any scalp and trail. I said we're going to do scalp and trail. We weren't doing any scalp and trail. We were just doing trail. I didn't do any scalping. I guess we should have done some scalp and trail. We'd have probably been better off today if we'd have tried to do some scalp and trail. Well, I don't know. We didn't get any trail. But scalp and trail, well, I don't know. We'd have probably been better off because we'd have at least got some trails. Or I got some scalps in. We might not be down as far. We'd probably still be down. Scalp will oftentimes just pay for your little wimpy moves. And then the trail is where you make all your money. But we didn't get any trails. We didn't get a single one. Not a single trail today did we get. A little bit of a trail here. Come on. And we could scalp it and just take the 240. How many? Oh, we got two. Let's do that. Let's go ahead. We got 4 on. We'll just take 2 off. So we'll go sell 2. So now we took some profits. All right. So we finally got a winner. So we took, let's see, we're going to go on this chart and we're going to go close. So we took 100 off. That was $100 profit. Now we still got 2 long. That means we need to clean up our this one here, change it to 2 and say, okay, that didn't go. There, that is a problem. We need to let the programmers know that that's not working for us. Okay, delete that order. And let's come in here and change that over to 2. And we're going to replace it. We should just be able to change the quantity. That's not right, that it's not doing that. Okay, so come in here and go stop, edit, and we're going to go in here, trail ATR. All right, so we're just going to trail those 2 up on the little dots, see where it goes. Len, you need $900 to break even. I know. You think you're going to get $900 out of here? I don't think so. No, just 2 contracts. We could come in here. I'll show you. We could set it though. Just come in here and put our limit order in there. So we go add OCO. Right now we're going to tell this one edit, and we're going to trail this one on the ATR. Oh, got to come down here. Trail. Oh, ATR. There we go. We're getting a little bit of a movement. We need 900. All right. So if we put that at 900, 6, 7, 8, that's a long ways up there. 900. That's way up past our Fibonacci projection. That'd be nice if it'd go up there though, wouldn't it? We could come in here and say, well, we're going for the long run. We're going for a big Fibonacci projection. Let's get rid of this one here. Bring this up here. Come on, Lane's going to pull it off. There we go. It's going a little bit slower than we thought. We're going to play the Larry Pesavento's trick. There we go. We're at 61.8 right now. Let's break that. Come on, buddy. Let's go up to 130.9. We're at 380. Got a trailing stop. We're actually in the money. So we got, Lan, you should have still had 4 contracts. You'd be close to having your money back. Well, did you know that? No, we were scalping and trailing. So we scalped 2 off. We let trail 2 trail. Come on, gold. Maybe gold will pull through for us, Mark. Did you guys see the new version of Pit News Magazine? Came out yesterday. How many of you got it? Let's come and say hi to a few people while we're watching this. Market stinks. Randy says market stinks. This is definitely a golf and fishing weekend. Jay says he just thought it was me. No, it's the market, Jay. You're a good trader. You're a good trader. It's just a shitty market. I always blame the market. It's always the market's fault. Yeah, no digging post holes, Chad. We don't want to dig post holes for a living. Kirk says, why not? Why haven't you done any wild eye, crazy eye, iron butterflies lately? Oh, we just got stopped out. We got stopped out with a profit of $240. So we brought our $1,000 down to $660. Can't complain about that. Didn't quite go up as high as I wanted, but better than nothing. Better than a stick in the eye. All right, so it brought us down off of our $1,000 loss to $660. Oh, Bruce says he's already finished the whole magazine. Way to go, man. Way to go, man. How many of you guys have Pit News Magazine? Is there anyone in here who does not have Pit News Magazine? You wouldn't admit it if you didn't, would you? Here, look. Joe Biden wants you to have Pit News Magazine. Listen to this.
Come on, folks. Look, the only thing I regret about my presidency is that I didn't subscribe to Pit News Magazine. Don't make the same mistake I made.
That's the only mistake he made. The only one. And that was the whole reason he had all the trouble he had in his presidency, because he didn't have Pit News Magazine. Now, don't make the same mistake Joe Biden made. Come on. Come on. How about this one?
Hey, Land Turner here. I got a hot stock market tip for you. Subscribe to Pit News Magazine. You can thank me later.
Of course, we all love Claire.
You know how some people read Pit News Magazine for the charts and strategies? Me? I started reading it for the pictures. And now I write for them. Go figure. If you want trading content that's smart, useful, and doesn't put you to sleep. Oh, and occasionally features me making up terms like tail fuzzies. Head over to pitnews.com and subscribe. And hey, if you find my picture in there, don't judge. They caught me mid-espresso.
All right, guys, it's fun to play with AI. Let's come in here. Where's another AI? Here's one I really love.
Look, if you haven't subscribed to Pitt News Magazine yet, then I'm going to need to see you professionally because you must have something wrong with your brain.
It's one of my favorites. All right, we all like to look at Claire. She's a pretty girl. So here, let's look at her ad about. How many of you go watch her podcasts? You got to go watch her podcasts. They're on the YouTube channel. I mean, you don't have to just get the podcasts over on her, on the, what do you call it? Podcast thing. I don't know. Go to YouTube and watch her podcasts. They're posted there.
Hey, Claire here. Guess what? Mr. Turner handed me the mic. I've now got my very own podcast, Pitt News on Air, your new weekly hit from Pitt News Magazine. Join me every Wednesday for stories, interviews, and a little behind-the-scenes scoop. We're live on Spotify, and yep, now on Apple Podcasts too. Visit pittnews.com to follow. Come hang out with me and the gang. We're all there. Jake and Lena, of course, Lan Turner, David Duty, Dr. Scott Brown, Jordan Black, and even Aiden shows up on occasion. We're having a world of fun. Don't miss out. Pitt News on Air. Because news should never be boring. It's where your trading friends are. Follow us wherever you get your podcasts.
And also on YouTube. She wasn't posting on YouTube when she made that ad. So, but now she is. So it's on YouTube. All right, look, we're making a Fibonacci bow tie. What's a Fibonacci bow tie, Lan? Well, it's this pattern right here, where it breaks above this previous high, and then on this one, it's a shitty Fibonacci bow tie. It made a real small, dinky one. So it came down here, went up here, and came back down here. And that is a Fibonacci bow tie right there. So, and then you tie it off back to the previous high. So that's the bow tie. Now, what we generally see when we do a bow tie is we want to see it go from this distance to this distance, double. So we go from there to there. We wanted to see it go up a little bit higher up here, and it didn't. So it wimped out on us. Wimpy little Fibonacci bow tie. And that happens sometimes where it goes up, it breaks the high, and it doesn't do a full, nice, beautiful bow tie. But that's what you do with this little tool here. So I'm going to clean out all these tools. I'm going to show you what this little tool right here does. 1, 2, and then we go up here, and the number will go to 200. All right. And you put that up to 200 right there. See that number right there? That is the top of the Fibonacci bow tie if it does just the mirror image of what it did on the way down. Pull back, up, down. And then it comes back down. It's supposed to come back down to 100%. That's the bow tie. So I'll draw it out here. Here, 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 bow tie. This is where the area of support becomes resistance. So you have resistance. It's resistance on the way up, and then it goes up, and then it comes back down to support. All right. So it turns support, resistance into support. Okay. And that peak right there is kind of the key starting point. That's where the Fibonacci bow tie all starts out. Now, right here, it's trying to go. Now, the market's closed. Now, not this market. This gold's still open. But remember, the stock market closed already about 3 minutes ago. And so that's why I tell you, when the stock market closes, the rest of the market kind of loses all of its energy too. So you say, well, I could still trade right here, Lan. I could pick up this next rally. Well, go ahead. Give it a shot if you want. But we're not going to have a whole lot of people trading right now because they all went home because they were all with the stock market. Even though the market's still open, we generally can't get a trend out of it because it's really slow. But we're going to give it a shot. We got $660 to go. Let's go in here. We don't want to take a big risk. So we're going to take our 3. Let's put our stop right in here. Just right there, right behind the action bar. And that's it. It's got to go decisively in our favor. If it doesn't immediately and decisively move in our favor, just get out. Just get out. I've still got my Sunday school lesson. Let's see if we can't trade just for a few minutes longer here. This will be the last trade we take. If we don't make any money here, if we can't get anything going here, we'll go to our Sunday school lesson. Jay says he listens to Claire. Randy says he listens to Claire. Oh, we just got stopped at again. Rotten market. Rotten thing, rotten market. Rotten. All right, guys, I guess we'll go look at our Sunday school lesson. Before we do that, I can't not go look back at the NASDAQ. Well, it was choppy too. Look, we'd have got our heinies handed to us over here too, trying to do anything. Choppy do, spiky dikey doos. What did Claire call them? Hairy bottoms and hairy top. No, she called them something a little bit less crass than that. Look at this. Terrible. If we'd have traded the 1 minute chart, we might have been a little bit okay better. A little bit better on the 1 minute chart. But right through here would have killed us anyway. We'd have died right through there anyway. The 1 minute chart. Instead of the range bar. But crude oil. We just couldn't pull anything off today, guys. We just couldn't have any. No luck. Luck was not on our side today. We had a few nice little moves in here. We caught this one for about $300 to bring us back. We caught that nice little move right there, and that was about it. Tried to catch that one, didn't go anywhere. That one didn't go anywhere. That one was the only one we caught today. We caught it in gold. Gold made us a little money. That's it. I'm a little disappointed. Little disappointed in the market today. It's all the market's fault, not our fault. We did our best due diligence. Cut our losers short, but no runners. We couldn't get any runners. Maybe we'd have been better off if we did a little scalping trail, a little bit more scalping, a little bit less trailing. I was trying to do a little bit more trailing. I thought we'd do a little bit longer trail. We'll try again next week. How's that? You guys want to come and we'll try it again next week? All right, here we go. Don't swing for the fences. This causes horrible losses. Maybe we were doing a little bit too much swinging for the fence today. We're trying to, catch all of our money in one trade. Turns winners into losers, causes inconsistent results. And this is a marathon, not a sprint. Winners have a lot of base hits. We weren't trying to take base hits today. We couldn't even get a base hit today. We couldn't even get our stop move to break even. It was just a shitty day. And we need to have realistic expectations. Maybe we had a little bit of a unrealistic expectation today, trying to get something a little bit bigger than a scalp. No, we should have just been scalping some $5 trades out of here, or some five tick trades out of here, but we didn't. We were trying to catch a little bit of a run, and it just didn't happen for us today. So have realistic expectations on a dead day like today. I don't know. Luck wasn't with us today. All right, guys, that's it. That's all I got for you. If you guys haven't got Pit News Magazine, swing by and pick that up. And Claire will remind me to remind you. And I'll say, I already told them, Claire. I already told them. And if they don't have it, they'll go get it. They promise. All right. If you have any questions, let me know. And we will see you guys tomorrow morning, bright and early, 8 o'clock. We're going to review our Universal Basic Income Portfolio. There's actually not a lot to do there because most of the stuff, well, you know what? I've been showing my real money portfolio. We could go look at the demo portfolio, the one that's the class portfolio. I think we got some trades in there that we could put in, make sure that we're doing it. The market moved up today. I had a good day today, about $25,000. Of course, yesterday I lost about $25,000. So the market's just really kind of just bouncing around up here during the 4th of July weekend. But I guess that's the name of the game, right? Universal Basic Income Portfolio. We'll go look at the options. I took a bunch of options profits off. Now we have to go find some opportunities to put some options back on, but we'll see. We'll see what happens tomorrow morning. Come and join me 8 o'clock in the morning, Mountain Standard Time. Make the adjustment for your time frame, and we'll see you then. Take care.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pit News Magazine.
Oh yeah, definitely subscribe to Pit News Magazine. You'll thank us later.